Good day and welcome traders. In this video today, we're going to be talking about order blocks. You will learn in this trading the only 3 order blocks you need to know: how to draw order blocks the right way and how to identify the volume of a zone. And I'm going to be sharing with you guys a little bit later my trading hack. After trading SMC for almost 2 years, this is the one thing that changed how I trade order blocks. Before we get into this video, smash that subscribe button if you want to become a consistently profitable trader. The best order blocks are always accompanied by displacement of price. This is the secret key. You see over here, we've got this break-in structure with this massive momentum candle. This displacement is what we're looking for. It indicates to us that there is volume, that the institutions and the big players are getting in the game. Regardless of the bias, the main factor is the momentum candles. Order block number 1. This is the normal standard order block. It's the last up candle on a down move and the last down candle on an up move. We look for a break in structure which leaves behind the zone. So over here you can see we've got this down move, this displacement, break structure, and it's the last bullish candle before the bearish drop. We mark out on the wicks, we extend that zone, and this becomes our standard order block. As you can see, price retraced, tapped into the zone before it reversed in the opposite direction. Order block number 2, indecision candles. What I like to do is I like to go into a higher time frame and mark out all the indecision candles that are linked to the zones that I'm looking to target, and they become strong zones. So I mark out from wick to wick on the indecision candles. I pull it all the way across and look at this perfect entry, just taps into the zone before it reverses. These are different kinds of indecision candles. As you can see, they got small bodies with big wicks or just bodies with no wicks. Familiarize yourself with these candles to make sure you can spot and mark out, especially when it comes to these massive momentum moves in the market. Indecision candles are where the buyers and sellers find equilibrium. It's usually the accumulation phase that creates them. Therefore, it becomes liquidity zones. It can represent a reversal zone in either direction. More examples of indecision candles. As you can see, this is a perfect indecision, pulled it out, respected it perfectly. Indecision over here, pulled it out, respected it perfectly. This is also another indecision. If you pull it out, it respected it perfectly. So backtest on your charts and actually start familiarizing yourself so you can just spot them every time you look at the chart. Order block number 3, the engulfed candle. So as you can see, we've got indecision candle here. We mark out this zone. Price taps into this zone, and then we're looking for these engulfed candles. As you can see over here, we've got this indecision candle, and then the next candle engulfs it. So the engulfing candle is showing us that there's momentum, that there's a big buyer in the markets. So as you can see here, this is an engulfed candle. The bullish candle before this bearish move, we mark it out, and it's also an indecision candle. So not only have we got an engulfed candle before it, but it is an indecision candle. It doesn't matter if it's a buy or sell or what color it is. This differs from the normal standard order block where it's the last up candle on a down move and the last down candle on an up move. With the engulfed candle, it doesn't matter. Wherever there's an engulfed candle, it's the one before it, whether it's a buy or a sell. What matters is the whole candle must be engulfed by the next candle, followed by a break in structure. Another way we can use these engulfing candles, we mark out the zone. As you can see, the candle just after that becomes this massive engulfing candle or displacement candle. So we know there's momentum over here. When price comes and taps back in the zone, if we want to wait for extra confirmation, we can wait for the engulfing candle to enter either there or this engulfing candle over here. Another example. So we got this indecision candle followed by an engulfing candle. We mark it out. Price comes, taps into the zone. This would have been a perfect entry. We always look for a momentum candle that breaks structure. This is super important. Order block entries. I like to mark out the wick entries. So as you can see, we've got an indecision candle over here. Then we've got this massive momentum candle. We mark out this indecision candle and this becomes the zone. Stop loss comes above the wick and we enter at the bottom wick. As you can see, price came back up and tapped into the structure perfectly. Also over here, as you can see, we got this displacement and break-in structure here. Left behind this indecision candle, it would have respected our zone perfectly over here. Regardless of what kind of order block it is, strong market structure breaks are number one preference for identifying the quality of an order block. So as you can see, we've got lower high, lower low, lower high, lower low. And then the lower high gets broken here with a higher high. And we've got this change in character. It leaves behind an indecision candle. We mark it out. Wait for price to come back into the zone. And this becomes our entry. If it breaks structure again, we look for another order block entry, which creates this rally, base, rally movement. Strong order blocks that change the market structure with momentum is the key to look out for. These engulfing patterns that break structure represent high quality order blocks. So as you can see, price is going down. It broke structure over here. We got this change in character, shifting from a downtrend, now moving into an uptrend. It leaves behind an order block just before this momentum candle. We mark out the zone and this becomes our entry point. Other ways of determining quality and low quality order blocks are: a high quality order block will have a break in structure and a change in character with massive momentum candles. It'll be a fast pump up, leaving behind an imbalance. A low quality order block is when we have price moving up slowly and it's not a big momentum candle. It's kind of a mixture, buy and sell candles kind of crawling to the top with no imbalance. You see big players move the market. We always want to look for signs when they have arrived, which are these massive momentum candles and displacement. The key to spotting a really high quality order block is we want to see a fast pump up with these big displacement candles, breaks in structures, changes of characters, and then a slow pullback to the zone. And that becomes a very quality entry. Another example, we have price respecting the zone, and it breaks above the zone. Old resistance becomes support. It shows that price is respecting the zone, which adds more confidence to take a trade on this level. Then we see price come back down to this level. We wait for this change in character, and then we know. Then price comes back, taps into this order block, and this becomes a really good entry. I'm going to share with you guys something now that changed the way that I completely trade. It's a super secret little strategy. It's the volume profile confluence. The major factor that will determine which order block is the highest quality is volume. If there's volume located in that zone, we pull a volume profile over the area of interest to confirm where the highest volume area is located. So over here, I pulled the volume profile and you can see that the highest volume area, the POC, is exactly in this demand zone. So it acts as a confirmation that there is volume here. So when price taps into this block, there are a lot of orders waiting to be triggered. Another example, we've got this displacement break in structure, leaves behind an order block. We pull our volume profile. The point of control coincides perfectly with the zone to confirm that there is volume resting in this area. Price comes back up, taps into the zone perfectly with an indecision candle, which shows us a reversal. So not only can we use indecision candles to mark out zones, but we can use them as confirmation of reversals off of the zones. We always want to add as many confluences as we can to strengthen the probability of entering into high win rate trades. Let us have a look at the charts. So we have here a cryptocurrency coin called Band USDT, and I want to run you through this setup. So what happened here, we had price creating these equal lows, which we know is liquidity. Break in structure indicated to us that the trend was changing. Price dropped down here, it formed this base, and then it had another big break over here. We marked out this break of structure. Whenever we get a break of structure with these momentum candles, we know that an order block is left behind. And we marked out these indecision candles over here as our order block zone. Sometimes what you can also do is you can mark out all the lows and you can see it forms a triangle, and this triangle becomes the center of our zone. What I also did was I pulled a volume profile, and you can see it lines up with the points of control in the center, saying that this zone is a very highly traded zone. There's a lot of liquidity resting in this zone. And then you can see price travels down, nice big candles, downtrend. We wait for price to come tap back into this zone, and you can see it taps in with these nice rejection wicks. That lets us know that price is rejecting this zone, and these wicks are actually drinking up all these orders that are waiting in this zone. You can see 1, 2, 3 times it occurred. So it shows us that these orders are being filled. And we could have taken a nice short from the zone all the way down to this last structure point. And then we saw another break in structure with these big momentum candles. We marked out the indecision candle, and this became another zone. Price came down, it broke structure again here and left behind another indecision candle, which we marked out. Then it tapped perfectly into this zone, got rejection, bounced down, tapped perfectly into this zone. So we could have actually taken a short from here to here. And we could have entered our long position over here. You can see price tapped into this zone, came back up and tapped back into this same zone. Then we get a break in structure of this level, and it leaves behind another order block. Can you see, guys, whenever you get a break in structure or a change of character, it always leaves behind a nice indecision candle. As you can see, indecision candle, indecision candle. For me, my go-to is always indecision candles. They're super reliable. Okay, then we wait for price. Price breaks the structure, it leaves this indecision candle, becomes another zone. You can see it. Then price comes back into this zone. Another indecision candle right here. It rejects off this zone. We could have entered here all the way back up to this order block. So we're literally playing from block to block, ping-ponging. It requires no market bias. Taps into this 30-minute order block, which we know is a good zone already, and we can see this massive rejection wick. Whenever you see a wick like this, it means either liquidations are happening or lots of orders are getting filled. This would have been the perfect entry point right here. We could enter on this line, stop loss above this line, and this would have been a fantastic trade. 11, 12%. We could have traded it all the way back down to this 30-minute order block. Taps into the zone. We get this big break of structure, and it leaves behind another indecision candle, which would have been our entry, our confirmation entry, back up to this supply zone. And price came all the way back up, tapped into the supply zone over here. And now I'm watching this closely because you can see all these indecision candles. If we go into a higher time frame, these indecision candles are showing reversal. So this is a great opportunity for us to get into another short position and trade this all the way back down to this demand zone. So can you see, guys, how price is completely respecting these zones? We pulled this volume profile. It showed us that this was a very, very great supply zone, indecision candle. This already showed us how much it's respecting the zone, respecting the zone, respecting the zone. Same thing happened here, respecting the zone, respecting the zone. So once we find these ranges between strong order blocks, it can be a very great farming technique to start making money. We can even pull our volume profile through this whole range, and it shows us the high of the range, the low of the range. So we know anything above this, anything above the value area high, it's short positions. Anything below the value area low, it's long positions. Awesome, guys. Go test out this strategy. Let me know if you have any comments or questions, and I'd love to hear your results.